Yeah, hi everyone. I've taken my quest for somewhere quiet in New York City to the absolute extreme, and I've come to the Cloisters up here in the Bronx, to where the Met Museum has what is actually an Italian monastery from the 11th century that was ruined. It's a French monastery, Perpignan, that's been moved here. It was ruins, and essentially it was moved here to the US by a wealthy person whose name escapes me, but this museum is now maintained and paid for originally by a certain John D. Rockefeller, who, was a very interesting character. You can read about it in detail in the book Titan, but Rockefeller was an extremely tough businessman. I mean, drove people to the point of suicide in his business dealings as a strong monopolist. Let's not, make any bare bones about this. But at the same time, he was highly religious Baptist who was highly philanthropic. And so, built the Rockefeller Center. Well, that was really his son during the Great Depression, but also had an estate further up here, which I really want to go to. That was his estate, but then he paid for this museum to be essentially maintained, I think. So it's essentially Rockefeller money that keeps this place available for people like me to record oil videos. So what's going on this week? Still Hess Chevron and all that is still very lively, because the shareholder vote is coming up May the 28th for Hess shareholders. We don't see the point in voting no. We don't know why a shareholder would do that, because essentially, or abstaining for that matter, which amounts to the same thing, because Hess needs a majority of all votes, so abstention is the same as a no vote. And we don't know why any shareholder would vote against it, simply because essentially Chevron would then walk away from the deal, but you would then leave arbitration unsettled, and that arbitration uncertainty would then remain on Hess, which becomes a poison pill for Hess. And therefore Hess will trade without a takeover premium valuation, and therefore Hess is worth less, all things equal, which is frankly a bit of a screw up, but they kind of anticipated the arbitration issue would come up. There is of course the FTC as well, but given the FTC just approved Pioneer for Exxon for Pioneer, I think, with some provisos that may apply, I doubt it, but possibly could apply to John Hess. The expectation is the FTC approves this thing essentially as they try and keep oil prices low in an election year, because these organizations have been corrupted by their politicization. Okay. Elsewhere, we've given up fighting this AI thing. We said the gas names have insane valuations. We're now saying buy the bubble. The way you play it, if you want to buy into the bubble, buy Vistra. I've just seen a big broker's just got another 20-25% upside, even though the stock price is insane. The thing about AI, as you know, is you're not going to prove that AI isn't going to work for years. So this, speculation on the future as being AI, think about the internet bubble and where you are today with the internet, and then keep buying Vista is kind of the general idea. Once these things start forming, they can run for quite a while, and obviously I'm saying this right into the Nvidia results tonight, which is the biggest thing of the week. And whichever way Nvidia goes, I still don't think it makes much difference for the idea that you need a lot more energy in an AI world, which of course is ironic given the so-called energy transition and concerns about emissions, that the future now looks much more energy intense than people anticipated even probably a year ago. Which, means the utility sector is catching a big bid, and, it's just very interesting to see how badly this turns out, how fast, just because you're not going to be able to meet all the power demands of everyone, but a lot of the demands are very flaky and probably will never show up. The companies that are truly pursuing this are extremely organized and are spending double what the global oil industry, or what the big US oils is spending. So your Microsoft, Amazon, CapEx is going to $200 billion this year on AI. And we're just not sure what the return is. What I will say is, I was trying to get LinkedIn help desk yesterday, and the AI on these help services and plane booking and stuff is just horrendous, isn't it? I mean, all I want to know is, how do you combine two LinkedIn profiles? Can the online help me? Not even close. You want to smash the computer and delete LinkedIn after about 10 minutes. Anyway, okay, that's enough about that. So oil is drifting into the OPEC meeting, not doing that well at the moment. There's too many concerns about the demand side. And refining margins haven't been too helpful. But and the expectation, I think, is that there's not much bullish that OPEC can do at the meeting either, because essentially they kind of have to roll, right? Which isn't going to be bullish because it's what the market expects. At the same time, they can't have the whole thing collapse because there's really not enough controversy, and the demand is good enough that really they can all have a decent amount of market share, even if they cut back a bit to make the price higher. Is there a potential for them to cut more? I don't think there's any credibility in a greater cut, because so much of this boils down to what's going on in Russia. And Russia, Ed Morse was highlighting that the Vostok field is going to add to capacity for crude from Russia over the next year or so, which is a huge Rosneft project. But the key point he was making is that Russian oil production costs have come down so much with the ruble, so essentially the business is low cost now thanks to the ruble's collapse. And that's generating huge profit margins for Russian oil companies. And so they're just simply not doing that badly. On the refining side, the drone attacks are, of course, having an effect, and it's estimated to be about 500,000 barrels a day, with some of the components to mend the refineries not available through sanctions. So it does look like it's a bullish setup for refining from the Russian impacts. It's just not coming through that strongly in margins, basically because things are weak in Asia. Having said all that, we're going into summer, and I think that things will be fine for refining for a while yet, and the stocks do remain extremely cheap with outrageously good cash return to shareholders. Okay, my wife's looking for me, and I can't remember what else I wanted to say, so we'll leave it until next week. Have a great week.